If you ask, how is Bitcoin value compared to fundamentals? Well, what fundamentals? It's kind of all vibes. In terms of the original idea that this was actually a superior form of money, it's a total bust.
Imagine you're playing a game where the currency has no bank, no rules, and according to Nobel Prize-winning economist Paul Krugman, no value. In 2024, Bitcoin hit $100,000, yet it's used for less than 2% of global transactions and is struggling to prove itself as a store of value. Let's examine why Bitcoin's price action has been described as the Fimbulwinter, the Norse myth of the final winter before the end of the world, and why some experts think Bitcoin is facing its own Ragnarok Armageddon. Welcome to Econopoly, where we break down how the economy actually works using real data and simple explanations. In Econopoly, every asset follows the rules of intrinsic versus speculative value. Most assets, like real estate or stocks, provide a rent or earnings, but Bitcoin follows a different rule, the sentiment multiplier. As Paul Krugman points out in a recent Bloomberg interview,
if you ask, how is Bitcoin value compared to fundamentals? Well, what fundamentals? It's kind of all vibes.
Without earnings or dividends, the only rule keeping the price up is the belief that someone else will buy it for more later. This is the greater fool theory codified into a digital ledger. As Krugman notes,
when people make price forecasts for Bitcoin, I always wonder on what basis. It's not like you can do a price earnings ratio on this thing because there's no earnings, no services. It's all just pure faith.
Krugman believes that Bitcoin's current price is held up by sentiment only, a scary thought for new investors. This creates a dangerous feedback loop. First is the policy pump. Politicians promise a crypto-friendly environment, like during the 2024 US presidential election. Then, institutional buy-in. Players like Strategy Inc., aka MicroStrategy, double down and hoard the asset, reducing supply. And finally, the sentiment surge. This political vibe convinces retail that the bank or the government will eventually backstop Bitcoin and make it a safe haven for investors. But if the government doesn't step in, the loop snaps, leading to stranded assets, investments that you can't sell because the exit has disappeared. Krugman notes that when markets were volatile recently,
and it turns out that in the face of doubts about stability, doubts about politics, the next gold turns out to be gold.
In 2024 and 25, Bitcoin stopped behaving like a decentralized currency and started behaving like an equity in the Trump trade. Krugman argues that the main interest in Bitcoin itself probably isn't carrying over to the stock market or the political promises associated with it now. It's no longer a libertarian concept, it's a political derivative, as many in the Bitcoin community were banking on the Trump administration to create regulatory certainty. Now, let's examine some outcomes using our bull case and bear case scenarios. In the bull case, the US government officially adopts the strategic Bitcoin reserve, selling gold and buying Bitcoin. This moves Bitcoin from the speculation tile on the board to the reserve currency tile. If the world's largest economy treats it as a store of value, the vibes become tangible and real. The sheer size of the Bitcoin market makes it too big to fail. Even a skeptic like Paul Krugman admits the scale is huge.
Crypto is still, even with the recent fall, it's still $2.5 trillion asset class. It takes a lot of money to bail that out.
At that size, the bull case assumes the political cost of letting it fail is simply too high for the government to ignore, and future administrations will offer their full support to prop up the US as the holder of the digital and analog reserve currency of the world. In the bear case, there is a crisis of faith triggered by regulatory uncertainty or a liquidity crunch in stablecoins like Tether. When the political pump fades and investors realize the government won't actually bail out a $2.5 trillion private asset with taxpayer money, the exit door becomes too small for everyone to escape at once. This is the Fimbulwinter that Krugman warns us about. He points out that in times of actual stress, Bitcoin fails the safe haven test. If it's not gold and it's not a currency, it's just a sticky cost, an asset you're stuck paying for that has no real future utility. So Bitcoin has spent 17 years trying to become a currency, but for now, until the government or the US consumer lend it more legitimacy and stability, it'll remain a $2 trillion bet relying mostly on sentiment and vibes. Subscribe to Econopoly for clear, data-driven explanations of economics and markets.